In today's video, I am going to show you the exact same strategy that helped me earn upwards of $100,000 over the last 30 days. I'm going to give you everything, the entire blueprint from top to bottom, and every piece of firepower that you are going to need to help you build a successful six-figure a year trading business starting right now. And I'll tell you what, this is going to change everything about you and the way that you trade for the rest of your life, just like it did to me. This is a strategy that was built on 20 years of my own blood, sweat, tears, and money. And it's become the lifeblood of my financial success. And this strategy has helped me earn more than six figures every single year since 2006. So there is no doubt in my mind that this strategy can get you to exactly where you need to be. And how I'm going to do this today is I have put together a very simple framework. You should have no trouble following along with this. And we'll obviously in the beginning, we'll start out with a very easy, simple stuff. And as the video progresses, we'll get into the more advanced things, but one step at a time. I want to start out by just kind of doing a few bullet points about the strategy statistics. That way, if you use this, you'll know if you can kind of target these numbers on a day-to-day basis, you'll have no problem making money. Obviously, we're going to discuss the strategy in detail because that's what you came to the video for. That's what you want to know, and I'm going to deliver. I'm going to show you how you can use this with foreign currency, cryptocurrency, commodities like gold, stocks, indexes, doesn't matter. Whatever you're trading, anywhere you are in the world, plug and play this, and you're well on your way to making some money. And of course, some live trade examples. I want to show you the very best of how this strategy works. Also want to show you what it looked like when it didn't work so good. You know, what were those bad days like? That way you can have all the info you need to take your trading to the next level. Now, before I get into that good stuff, I need to throw out a tiny little disclaimer. I'm sure 99% of you already know this, but hey, I need to say it. Obviously, when this video is over, you're not going to make $100,000 tomorrow. Like I said in the very beginning of that video, this is my life's work. I have spent 25 years in the trenches trading almost every single day the market has been open. I am giving you the strategy right now. I am using much larger sizes. And at this point in my life, I have a much larger account. So $100,000 to me might not be the same to you. And obviously vice versa. You know, maybe you're just loaded, right? So I just want to make that part clear. But what I am giving you is the exact blueprint and framework you need to get you to that number if that's what you're after. Because I started just like so many of you did with no money. I blew up accounts. It took me 6 years to learn this the hard way. Now, I don't want to scare anybody with that, but the era I grew up in, which was like 99, 2000s, and that's not when I grew up, but that's when I started my trading, is different. We didn't have social media. We didn't have YouTube videos. It was really hard to find mentors. It was a completely different era that doesn't apply to today. So it shouldn't take you that long, but I'm giving you that blueprint that will get you there if you follow those steps. So here's a couple interesting statistics about the strategy. I traded only one pattern and one candlestick formation. Really, the same boring, mundane, routine strategy the entire month. In fact, I've been doing the same routine, mundane strategy for 20 years now. 65% of these trades were on the E-mini futures, the NASDAQ futures. The remaining were in stocks, Nvidia, Tesla, Palantir, and Facebook, which is Meta. That's all I traded for the last 30 days. That's it. If you remember the last video I did, which was called One Asset, One Trade, the power of you focusing your attention on just one or two assets every day and just one strategy, that's why this has the power to get you to that six-figure earning. It's got to be simple, otherwise you're never going to be able to use it. A couple other things, win rate was 83%. That's about average for me. These were all day trades we're talking about today. No swings, no investments. 92%, I want to highlight this one. 92% of the trades were made within the first 2 hours. I also did a video about this. Very important. Wherever you live, whatever you trade, the first 2 hours is the best chance you're going to get to hammer your strategy. That's where all the money is made. Sure, there's some scraggles happen after that, but that's where you want to be. And that proves that 90% of that comes from one time frame. And this month was 76% long, 24% short trades. That's that's about right when it comes to a bull market. It was a bull market. I wanted to stay long most of the time. There were a few short trades in here and we will go over those. So enough of that. Let's get down to the good stuff, which is discussing this strategy. I've broken this down today in 3 different steps. We'll begin by discussing the setup, the pattern that I'm using every day exclusively. Some of you who follow this channel probably got an idea what that might be. Then I'm going to talk about the execution candle. There's a very specific candle that develops at a very specific time, and you need to be present and hit that thing. That's where the money is going to be made. And of course, once you're in this trade, how do you know it's going to work for you? What should your targets be? What kind of risks should you be putting on a trade like this? Now, the setup I am using exclusively, all of these trades came from the check mark pattern or a version of that check mark pattern. This is a reversal trade. We're going with the trend, but for the majority, this is the pattern I am trading on a day-to-day basis. I've done a video about this before, but in case you've never seen a video from me, this is what a check mark looks like. It is exactly as it is spoken. A check marked formation. You guys learned this in first, second grade. Really easy stuff. Now, the thing about the check mark patterns I've discussed before is that the setup is prior to it ever developing the check mark. The check mark itself is a visualization. So the setup comes from the very initial burst of momentum, either upward or downward. Then there is a candle pivot, which we're going to discuss here in just a second. And then this part is what we consider the target. By doing it this way and referring to it as a check mark or a V or any sort of symbol, you should do that with your trading. And the reason that helps is because it gives you a visual. So for example, if I am not looking at any other part of that, I don't know what my target might be. I don't know how to forecast that. So the entire check mark has 3 steps, which is the setup, the execution, and then the proposed target. Now these are guaranteed. Let me kind of clean that up so it doesn't get ugly and messy. This is exactly what you should do. This is exactly what you should do. But the target is always up for debate. And, the market has a lot to do with that. We'll talk about that as well. But that's what a check mark looks like. Now, just to kind of move along, we are going to talk about this a little bit more. I want to show everybody this does, in fact, happen in a real market. So on the screen is an intraday 5-minute chart of the NASDAQ. I just want to answer this question up front. I don't really care what chart you're using. It's universal. You can use a 1 minute, 5 minute, 1 hour, 30 minutes, 15 minutes. It doesn't make a difference. The formula is still the same. I'm just using this because this is what I grew up on. This was the first chart that was shown to me. This is where I feel comfortable. That's just what it comes down to with the trader. It's a matter of comfort. Back to the check mark. I just want to draw the moves here. If you take a look, there's just check marks littered all over this chart. You'll see these waves of momentum that mirror a check mark. So even though the NASDAQ started here and ended all the way up here, which is up, on that journey, there was a series of check marks, reverse check marks, reverse check marks, and back and forth. And it goes up and down in a series of, let's call, waves. This is what we're playing. We're looking to anticipate that move before it's happened. So if I go over here where it is right now, what am I looking for? If I don't want to buy it, I want to look for another check mark, right? Or an extension and a check mark, kind of jumping ahead a little bit, but I can forecast where the chart's sitting now, and you're going to be able to do this by the time the video's over, forecast where the chart is now and how I should position myself with that move. Now let's move on to the execution part. And for this, as many of you know, I'm only using either the John Wick or Power of Tower candles. Now I just did a video about that, but I will show you what these are just in case this is the first video you've ever seen from this channel. And what's really important about these candlesticks, all of this stuff I spoke about up to this point is irrelevant if this candle does not form at the right spot. So first, let me just do a quick overview of what I'm talking about when I say a John Wick candle. To most of you, you're going to know this candle, if you've studied candlesticks, as the hammer candle or an inverted hammer. I like to use the John Wick. I'm very into that kind of stuff of using shapes and names to help me identify with my strategy. But the importance about this real quick, we will go into detail about this. But why this candle is so strong is because it represents a very abrupt shift in sentiment. So for example, the hammer candle was once a red candle. This was once a full-bodied red candle, and it hits a specific pivot or a specific area, and then there's this enormous amount of buying that takes place, and it claws its way back. Now, sometimes that's a tiny bit red. Sometimes it's in a very kind of extended doji cross, if that's kind of what I'm looking at. But nonetheless, the important part is the wick, right? That you got some sort of response at an area. Inverse relationship there to the top. At one point, you were breaking out, you were bold, you were strong, and then it pulls back. Sure, you've seen thousands of those in trades you've been in. And the power of towers is something I think is called the Marabuzzo brothers. Most of you probably refer to this as engulfing candles. Just did a video on this. Same significance, just a different shape. It's the abrupt change. So all I want you to think about right now in these two candles, abrupt change. You're at one spot and the market's emotional direction is moving in one area, and then it just kind of bounces. It's like a trampoline bounce and snaps back, or it rallies and all of a sudden just implodes. If you've traded, you've been in those situations, these wicks identify what will happen next. So if I pull back up that chart of the NASDAQ, I want you to take a look, and we're just going to talk about, just for now, each one of these rallies here on this chart. So if you take a look at this rally right here, from this peak to the very beginning, if we trace it back to the origins, you'll see right here in this spot was a tower move. Now, they're never perfect to script as they are drawn or as they are produced in technical analysis book, but the same principle applied. Like back here, you had a sell-off of aggression that stops everyone out and then immediately retraces itself and creates a rally. Now, if you look at the subsequent sell-off after that, what marked the top of that sell-off that ended up down here was in fact the inverted hammer. So take a look at this pattern again. You move up from the power of tower, you reach a resistance zone, right? A special area, and then down it goes. It repeats that same formula right away. I want to stop here. This is the beauty of it. It isn't a secret. It's a repetitive pattern. This is why we need to study patterns and shapes and understand this. It gave it to you, and it turned around and gave it to you 20, 30 minutes later. Right here, look. Same thing. Wick develops at that same level and moves right back up. Wicks develop, pulls back. Wick develops, goes back up, and keeps going on and on and on. Now let me show you something what's so special about this spot. If you take a look, this thing bounced 3 different times at the same 21,004. Why? Like, what was so big about 21,004? Well, if we back this out and we get a broader view, you can see if I just take this and start moving it to the left. It's a rough looking line, but you get the point. Take a look at that. Once a resistance, right? You've heard the saying in technical analysis terms. If you studied, if you haven't, you're going to hear it now. Previous resistance becomes future support, right? There it is. You break through that line, right? You break through the resistance. You come back and you revisit the resistance again, right? And then you come back, you visit it again and again and again. The thing is, as this is moving downward, as we go through the trades, you'll see as you're moving downward, the key is you already know long before you get there that thing is going to bounce. That's what's going to happen. And if we open this up here and scoot this back a little bit, take a look, right? You knew this area right here was important, but take a look. Look at all of those wicks that developed. And right there you have, prior to this rally, right there it is, I will open it up for you, is a John Wick candle. There it is. So you can see, like, and here's another one right there at the bottom. Every single one of these reversals, every single one of these pivots, everything you see on that chart wasn't a flatted candle. It was either a John Wick or it was a power of tower. So now we've got that formula down. Let's take a look at these trades so you can start making them yourself. So on your screen there, you'll see the very best day was a little over 17,000. The worst day, a little over 14,000 in losses. And when you ask somebody, hey, what do you want first? The good news or the bad news? They always say, give me that bad news. So let's talk about the bad trade. Now, I wouldn't say it's a bad trade. It's just a product of what we're doing. You win some, you lose some, and that's just the way it goes. So it happened here on the 17th, and my original idea, this is the NASDAQ, by the way, my original idea was to stay long and stay on the side of the market. I was looking for an early pullback to 21 280s or 240s. If you want to know why, take a look at these levels. I was hoping this thing would get down in here, test that, a John Wick would show up, and then get long for a retracement back up to the high of day or even through. I was looking for that check mark. Well, the market has other ideas, as it often does. Some news comes out, and this thing just goes nuts. And I want to show you this big old parabolic move right here, and I'm going to stop it right here in this spot. Now, once this thing has gone parabolic, if you've ever seen any video I've done, I've talked a lot about range. You start with the ATR, the daily range, and how these moves are measured. And if you take a look back on some of this past activity here on the 5-minute, if you measure these moves, you'll see in sequence, they run about 100, 120 points. This is hella a lot farther than that. This is straight up, and it's been going up all through the pre-market. So once it's gone up that high, all bets are off for me in the short term as far as buying. I'm looking definitely to short, and I started looking for some areas just as I would. A reverse check mark is what I'm looking for. And I was kind of wanting to play right off of this level and use some stops right at the high pivot from the previous day. So take a look. There is your resistances. So my idea was to look for a power, a tower, or a John Wick to develop. Stops up here and targeting about a 50% to 100% A-frame style retracement off of this move. Well, that didn't happen. I actually entered right here. If you remember the power a tower video, when I do an entry on the power a tower, I take about 50% of that candle. Any big, large, robust candle like this, I normally enter 50%. And because of the range, I jumped right into that thing. Maybe I got a tad bit aggressive too soon. I'll just put a little sell right there. Now this is on a replay with TradingView. This is not the actual spot on entry. I'm just kind of playing this back. Going to do one contract here just so everybody understands. I want to make sure we're on the same page. And my stop loss was going to be just over top of the high. So I was looking for somewhere up in here and maybe even adding. That's kind of what I thought. Give it a little bit of room, and well, you can see what happens here. The market just blows right through this like nothing. It just goes right through, completely takes me out, which is okay. I decided I'm going to try that again. I was expecting that. I had it planned again. And there's no such thing as a bad trade if you use a stop. Anyway, moving forward, I'm looking again. Let me try it again because now we've exceeded the highs. Anyway, so I'm going to forward this. Hopefully I can catch the right candle. Sometimes this thing plays back very quickly. Okay, right there. So let me highlight that. This candle right here. I want to go back and I want to focus on this candle. This is where the second entry was. And because this thing has a tendency to skip, I'm just going to hit the sell button here again. This is not 100% accurate according to the way I entered it, but it is the same theory. I'll show you this here, right there, because I can't catch this actual bar. So I shorted into this bar with another stop right up here over the high of day, right here in this area. And immediately I got cheesed on this bar. I mean, it was like seconds later, I get in here, stop over the high, and I got punched. Now, this is something that happens to me, that happens to you, that happens to all of us. Right after I got stopped out, like this is the ultimate cheese move. I short here. I think I was in this thing for 10, 15 seconds before I got blasted in the face with this big hit. Take the loss. And then it turns around and completely power towers on the next one. It was a total blow off top. That happens. Now I did get back in here on the short again. And it did work out, but by that time, I had lost enough money on the previous two trades that this was very, very small. And then I just kind of scalped it. I probably did that honestly to go, oh, look, I finally got you, man. So That's what the loss looked like. Now to talk about the winning trade here and what was actually special about this day. It's one of those days you're just on. Hopefully you know what that feels like. But it's like one of those days you can do no wrong. Market is respecting its technical levels like a charm, and you just got to make the most of it while you have it. So it was on the 13th, and just like I was talking about the last trade, was trying to stay on the side of the market, was looking for early morning dip into deep level daily chart support down towards 27.25. That's exactly what we got. We got the power of tower wick, the John Wick developed, and down here in this area is where I got long. Now, again, this is a replay. This is not the actual spot on entry with the spot on size. I'm just showing you what happened here and how we look at it. That's what I want you to understand. Take a look at what happens here. That wick shows up at the precise spot. It didn't, any of these other wicks like this one, the previous one, if you take a look at it, that's the problem with that wick, is it got bought up way too soon and it needed to test this deeper level. Stop on this one was at the low of the day and the target price was up towards the high, a very great risk to reward. Now, if I play this through here quickly, it just worked like a charm. Again, just exactly the way it was drawn up. You get a very, very nice bounce. Now, if you get a bounce like this, you can obviously trail up and move. And there I was out of that trade. So a very good start. Now, this does the same thing all over again. If I kind of fast forward this a little bit, you'll see it actually comes back down into that level again. There was another buy into that support again. Not 100% accurate there. It was the same trade. Like it gave it to you again. And that's the beauty. It will do this if you know exactly what it is you're looking for. Now, this one kind of surprised me because the way the market was moving that day, kind of choppy. This thing just kind of blew right up to the top. And there was another nice gainer on that one. So 2 for 2 there early. Now, when I saw this one and we got up here towards the top, I just want to back this up to show everybody what I was looking for. I shorted into that resistance. I just went right for it based off of the measured move, based off of the parabolicness, and based off that we had already been open for about 2 hours, not quite 2 hours in the day. Market was really, really choppy, and I just kind of had this feeling we were not going to rally that far. I threw a nice little short in there. It wasn't huge in size, but you know, when you got some money in your pocket, that's what you do, right? And I want to show you something else here. As I played it through, it did it again. Like you got a third shot into this trade. And I didn't get the third one by this time. My day was over. There was 2 longs and a short, but look how respectful that was. But there was actually a fourth trade. I mean, I should have took it. There was another John Wick right here. Take a look. All of this stuff just got tested. Maybe the newer traders want to call that liquidity, but look at that. If you guys remember the box theory, this thing just pounded between the boxes over and over again. So that's what the winning trade looks like. But you'll see that every single one of these trades was the exact same thing. I'm looking for a pullback into support or a rally into resistance. When we get there, you've got to get there. You can't do it prematurely. Like the short on this isn't here, right? It's not here. It has to be right up here is where that short needs to be. But you can't if you have a large account, you can kind of lean in and add. But you wait for the signal. You get the power of tower. The signal itself with the John Wick and power of tower marks your risk. This puts a limit on your loss. And that check mark allows you to visualize returning to the lows, returning to the highs, returning to the lows, and so on. And you keep doing that, everything's going to be good. So in a quick recap of what we've discussed today, that blueprint framework to get you on your way to making some very good money. Number 1, start your day by plotting those levels. Go from the nearest to the farthest. Just start looking left for those premium liquidity, premium pivot levels. When you get to that area, as always, look for that John Wick. Look for that power of tower to form. Look for something in a candlestick formation to show you a buyer has shown up. That's your guardian angel when it comes to managing your risk and getting the quality out of your trade. Take your stop, put it underneath of the wick. Yes, you're going to get hit every so often, but if you buy deep in there or you sell up top, chances are it's not going to happen as often as you may think. Try to target at least 2-to-1 risk versus reward. I didn't get into that topic too much, but that's what you're looking, is a return to where it came from, that measured move. And last, I just want to have like just a trader to trader talk. One thing that was told to me so many years ago is, don't worry about making money, just worry about making good trades. And I know you've heard this before. If you just get up every day and you focus on those levels, you focus on positioning yourself, start small. We all were rookies once. We all started small. We all walked that path. That's all you need to do. The beautiful thing about trading that really stood out to me when I was younger was, all I got to do is figure this out. Once I get a good strategy, then it's just a matter of scaling. Like the difference between making $5,000 a month or like $500 a month or $50,000 a month is just size. The sky's the limit when it comes to trading. It's just a matter of scaling up. So start small, get the process, internalize it, build your confidence, and start adding on to your positions slowly. Don't jump ahead, because usually when we look back, our worst trades is just getting a little too ahead of ourselves. As you saw, I did there too, right? It happens. So anyway, guys, I hope this video made some sense. I hope you have a fantastic month. As always, if you need any help with your trading, every single week, my wife and I produce a watch list and a complete market breakdown. It is free. It's called the Gains Guide. There is a link down in the description. Just go there, follow the path. Every week we give a list of the very best stocks and assets to trade with precise buy, sell, and everything that you need to structure some great trades. So if you're looking for that, go down in the description box. As always, it's my pleasure. Hope you learned something today. Take care. Trade well. Till the next video. Cheers.